Okay, we are recording. Hi there, everybody. I am doing this recorded lecture for chapter 3 of our accounting for payroll textbook. And basically in chapter 3, so in chapter 2, we got practice with calculating gross wages. And we did that several different ways together. Now in chapter 3, we're getting practice with calculating, basically FICA, the Federal Insurance Contributions Act, FICA Social Security, and FICA Medicare. Although your book, in this textbook anyway, labels these as OASDI, which is the Old Age Survivors and Disability Insurance Benefits, which is FICA Social Security, and then the Retirees Health Insurance Program, or HI, Hospital Insurance, which is the FICA Medicare portion. So, again, as we've said in class, for those of you that had me for Principles of Accounting 2, we got a lot of practice doing this together. And as you're going to see, the percentages are exactly the same. It's 6.2% for FICA Social Security, 1.45% for FICA Medicare. So we'll get some practice doing this in class together, but I just wanted to do this lecture to go over the PowerPoint. So I'm going to get the PowerPoints pulled up and share my screen with you. Okay, so these are our chapter 3 PowerPoints, and I did post these into ALNet already, so they're already there for you. But again, basically chapter 3, we're getting into the FICA calculations and then some of the different tax forms that we use for these calculations. So some of these learning objectives of the chapter: identify for Social Security purposes those persons covered under the law and those services that make up employment. Identify the types of compensation that are defined as wages. Apply the current tax rates and wage base for FICA and SECA purposes, SECA being Self-Employment Contributions Act. So again, FICA, Federal Insurance Contributions Act, and then SECA, Self-Employment Contributions Act. So describe the different requirements and procedures for depositing FICA taxes and income taxes withheld from employees' wages. And then complete the Form 941, which is the employer's quarterly federal tax return. And then if we remember, and again, we're going to see this as we continue through the PowerPoints and as we get practice with this, but remember this Form 941. This includes the federal income tax withheld. This includes the FICA for the employer's portion. And then this includes the FICA for the employee's portion. Because if we remember correctly, and I know, again, I know we mentioned this in class, but if we think about the FICA Social Security and FICA Medicare that come out of the employee's paycheck, the employee pays 6.2% FICA Social Security and then 1.45% FICA Medicare, but then the employer also matches that, right? So, actually, in reality, 6.2 times 2, 12.4% is getting paid in for Social Security. And then 1.45% times 2, 2.9% is getting paid in for Medicare on your behalf, right? The employee does 1.45%, the employer matches that. So, again, we're going to see that as we continue through the PowerPoint. And then, of course, we're going to get practice with these calculations in class together. Okay, so coverage under FICA. Again, this is the Federal Insurance Contributions Act. This act was first put into law in 1935. These represent taxes paid by both employees and the employers. And so the employer pays 6.2% for Social Security. The employer pays 1.45% for Medicare, and the employee does as well. So again, 12.4%, if we add these two together, 12.4% getting paid in for Social Security. And again, we add these two together, 2.9% getting paid in for Medicare, right? And so, and like it shows here, additional Medicare tax of 0.9% applies if wages exceed 200,000, but the employer does not have to match that additional 0.9%. And then SECA, the Self-Employment Contributions Act, this was put into place in 1951. It's a tax that has to be paid on the net earnings of self-employed individuals. So again, when we think about FICA, FICA, there's an employer's paying 6.2%, the employee's paying 6.2%, 12.4% is getting paid in. But when you're self-employed, you have to pay the entire 12.4%. You have to pay the entire 2.9%, right? And so because you don't have an employer matching your 6.2 or matching your 1.45, those amounts have to be paid in, by the individual who is self-employed. And then a couple issues that we have to deal with, and again, we'll get some practice with this within our problems that we do together in class. But is the individual classified as an employee or independent contractor? Is the service rendered considered employment? Is compensation considered taxable wages? So those are a few things that we'll be looking at, again, as we continue through the PowerPoints and as we get practice with these. All right, so independent contractor, which would be covered under the Self-Employment Contributions Act, versus employee, which would be covered under the Federal Insurance Contributions Act. So every person is an employer if person employs one or more individuals for performance of services in the United States. So person includes individual, a trust or estate, a partnership, or a corporation. Employment applies to any service performed by employees for their employers, regardless of the citizenship or residence of either. And then certain occupations specifically covered by FICA, just like it shows here, full-time life insurance salespersons, agent and commission drivers of food/beverages or dry cleaning, full-time traveling salespersons, individual working at home on products that employer supplies and are returned to furnished specifications. So some more specific situations, and it talks about this basically, chapter 3, page 3, and then page 4. So government employees, certain exemptions from the FICA Social Security and FICA Medicare, depending upon date of hire. Impatriates, so an expatriate is, someone that moves to a different country. Impatriate is someone who moves from a different country to here. And again, it talks about this, page 3, page 4 of chapter 3. So impatriants may be exempt from FICA, depending on the agreement that the United States has with their home country. Basically, they don't have to pay the taxes in both countries, essentially. Expatriates subject to foreign Social Security tax. Family employees in certain situations, children under the age of 18 may be exempt from FICA. Household employees, if they make cash wages of 2,100 or more per year, they're subject to FICA tax, and then must pay if domestic employee like a nanny or cook is under your control. So if you have a nanny or a cook employed in your household, they do, you do have to pay the FICA tax on those individuals. And then additional exemptions, and again, it talks about this, page 4 of chapter 3, inmates, medical interns, student nurses, and workers serving temporarily in case of an emergency are exempt from FICA taxes. Okay, independent contractors. So an individual is classified as an individual contractor if they conduct an independent trade or business. And again, it shows us some examples of these on page 5 of chapter 3 or 3-5. But, basically, like it tells us, the top of page 5, workers may be classified as independent contractors if they hire, supervise, and pay assistants, determine the sequence of their work, set their own work hours, work for as many employers as they wish, are paid by the job, make their services available to the public, have an opportunity for profit or loss, furnish their own tools, have a substantial investment in their trade, and may be dismissed only under terms of contract. So those are a few of the tests in place to determine whether an individual is an independent contractor or an employee, basically. And so just like it shows here, hiring agent does not pay / withhold FICA on worker classified as independent contractor. Basically, independent contractor is a self-employed individual. Independent contractor is liable for his or her own Social Security taxes on net earnings. If employer misclassifies employees, there are penalties. Again, it talks about this a little bit more in depth on page, bottom of page 3-4, top of page 3-5. But the penalties generally equal to the employer's share of FICA taxes plus income / FICA taxes that were not withheld from the employee's earnings. If employee reported earnings on Form 1040, the federal income tax return, the penalty may be voided. Penalty may be reduced if employer filed a 1099. The 1099 is like a miscellaneous income, similar to like a W-2, for example. But for individuals that are independent contractors, like for example, if William Woods hired, an independent contractor to come in and maybe, update flooring or something like that, then they would then provide that independent contractor or mail that independent contractor a 1099, which is just 1099 miscellaneous income, basically. And then that independent contractor would have to take all of the 1099s that they received, from various jobs that they did, and use those to file their taxes at the end of the year. All right, so what are taxable wages? This kind of starts toward the bottom. This is like learning objective 2. It kind of starts toward the bottom of page 5, chapter 3, page 5. So taxable wages for cash, wages and salaries, bonuses and commissions, and the cash value of meals / lodging provided, but only if for the employee's convenience. Fair market value of non-cash compensation. Some of those examples: gifts over certain amounts, stock payments, fringe benefits, like the use of a corporate car or flights on an employer-owned plane, bonuses, premiums on group term life insurance that are greater than $50,000, and vacation pay. And then again, it shows us some more examples of this on page 3-6. Advance payments, back pay awards, bonuses, cash and non-cash prizes and awards, Christmas gifts, commissions, death benefits, employees' federal income and Social Security taxes paid for by the employer, fringe benefits, guaranteed annual wage payments, idle time or standby payments, insurance premiums paid by the employer for an employee's group term life insurance coverage, jury duty pay, moving expense reimbursement, retroactive wage increases, severance pay, sick pay, stock payments, vacation pay, right? Those are all examples of taxable wages. And then tips greater than 20 or more in a calendar month. And it shows us an example on the top of page 7, so 3-7 of this form 4070. So employees can report tips to employer using the form 4070, or the employer may elect to use the attributed tip income program, which is a formula based on the employer's credit card sales. Just like it tells us with this attributed tip income program, the formula is based on the employer's credit card sales. That determines the amount of tips that must be reported to the IRS. The employer then assigns the required amount of tips among all tipped employees. To be eligible to use ATIP, the employer must have at least 20% of its gross receipts from charged receipts that show charged tips, and at least 75% of its tipped employees must sign a participation agreement. All right. Specifically exempt wages. It talks about this more in your book on page 8, chapter 3, page 8 or 3-8. So meals and lodging for employers' convenience. So, you know, for example, if, you know, maybe we had to pay, you know, one of our salespeople to, you know, fly to Chicago, and maybe they had meetings like 3 days in a row, then it would be at the employer's convenience to pay for them to stay in Chicago for 3 days straight, instead of flying back and forth, you know, 3 different times type thing, right? So if it's for the employer's convenience, those are exempt. Sick pay only after 6 consecutive months off or personal injury situation. FICA defines sick pay as any payment made to individuals due to personal injury or sickness that does not constitute wages. Pay for the difference between the employee's salary and military pay for soldiers or reservists activated for more than 30 days. Employer contribution to retirement plan, employer provided non-discriminatory education assistance. And so job-related education expenses are not subject to FICA, or payments for non-job related expenses up to $5,250 per year are exempt. FICA taxable wage base. So, you know, this wage base changes every year. Basically, the wage base is, and I'm trying to find exactly where it says this so I can tell you the wage base. So this is kind of, you know, about 2/3 of the way down the first paragraph on page 10. It says, just as Social Security benefits increase each year based on changes in the consumer price index, the taxable wage base is increased also. So, you know, I know I probably have said this a lot, but for those of you that had me for Principles of Accounting 2, we got a lot of practice with these calculations. And in Principles of Accounting 2, because that book was published in 2016 or 2017, whatever it was, The wage base at that point was 118,500. As of the printing of this payroll textbook, the wage base is 132,900. And if I'm not mistaken, right now, because again, these are 2019 numbers, right now in 2020, I want to say it's like 142,000. So it's even went up a little bit more than this. And so basically what this means is that employees have to pay 6.2% for Social Security up to 132,900 of their wages. After they get over 132,900, they no longer have to pay that 6.2% tax on their wages. And so based on this 132,900 times 6.2%, that's a maximum Social Security tax in a year of $8,239.80. And then HI, or the hospital insurance, AKA Medicare tax, it's 1.45%. There is no maximum. So where Social Security, we only have to pay up into a maximum amount. Hospital insurance, AKA Medicare, there is no maximum. And then just like it shows here, there is an additional 9% or 0.9% rather paid on wages in excess of 200,000. And you know, they give us this interesting note, and this is why, and I know I sound probably a little bit pessimistic. You guys have heard me say it before. I save for my own retirement because I'm not 100% comfortable in depending on the government and depending on Social Security to be there for me when I retire. And I'm 40, so say I got 25 more years, you know, to retirement. I'm not completely certain that Social Security will be there for me. And I would encourage all of you to be proactive and to pay into your own retirement account so that you're not dependent on Social Security either in retirement. Because just like it shows here, in 1950, there were 16 workers paying into Social Security for every one person collecting benefits. By 2042, that ratio is projected to be 2 to 1. So only 2 people paying in for every one person collecting benefits. Which is why, if you've ever heard, people talk about this, that Social Security is insolvent. Eventually we're going to get to the point where so many people are collecting on it, not enough people are paying in, type thing. Excuse me. And so that's one concern, that I have even at my age. And so I hope that everybody, is proactive and kind of takes steps to pay into their own retirement. Certainly I try to talk as many of you into it as possible. So we'll see. All right. So here's an example. Again, these calculations aren't very difficult. We've done these together, or at least most of us have done these together before. We can multiply by a percentage to determine what is owed. It's not too difficult, but this one says Tamara earns $141,800 per year and is paid semi-monthly, which remember semi-monthly means twice per month, on the 15th and the 30th. Determine the FICA tax for the December 15th payroll. So it says first we want to find prior payroll year-to-date gross. And so if we take that 141,800 divided by the number of pay periods per year, this individual earns $5,910, basically twice a month, right? And then, depending on, where we're at in the year, in this case, December 15th, then we can say, okay, this person has been paid, up to this point, $130,020, right? So remember, the maximum is $132,900. So if we take that 132,900 minus where the person is at right now, this would be we would call this beginning cumulative earnings. I'm not very good at writing with this thing. Beginning cumulative earnings, right? And so we take the maximum minus their beginning cumulative earnings, and that would tell us that we only need to pay, or the employee only needs to pay Social Security taxes on another 2,880. So, excuse me, if we take that 2,880 times 6.2%, or 0.062, right? That would tell us that we're going to need to deduct, as the employer, we're going to need to deduct $178.56 from this individual's check. And then also, again, the employer matches that, right? So this is the total amount getting paid in, 178.56 times 2, basically, right? And then remember, on FICA Medicare, there is no limit, right? So both Tamara's and the employer's HI or Medicare tax is the 5910 times 1.45%. So $85.70, basically times 2, right? Because the employee is going to pay in 1.45%, and then the employer is going to match that 1.45%. So what is the total FICA tax? Again, adding in FICA Social Security and FICA Medicare, we would add both of these numbers together, both the employees, Tamara's 264.26, and the employer's 264.26, right? So the total amount getting paid in for this individual, I don't know. Of course, I didn't have enough foresight to bring my calculator into my office with me, but what are we looking at here? About $528 or something like that, right? Okay. All right, here's another example. It says Sambit earns $225,000 per year and is paid monthly. Determine FICA for the November 30th payroll. So, again, paid monthly, we're going to divide the 225,000 divided by 12. And so this individual makes 18,750 per month. And then, so if we're looking at how many pay periods were up until this November pay period, our beginning, again, this represents beginning cumulative earnings. And so beginning cumulative earnings, that would be up through but basically up through the end of October, right? Those would be our beginning cumulative earnings. And so if we look at, okay, if this person's already at 187,500, they're already over the Social Security tax maximum, right? Remember, the maximum is 132,900. So they're at 187,500. They're already over that 132,900 maximum. So zero paid into Social Security, right? This individual has already paid in their portion of Social Security for the year, right? However, remember, Medicare or HI, hospital insurance, Medicare, there is no maximum, right? And in fact, once this individual gets over 200,000, there is an additional 0.9%, right? So if we look at, okay, 18,750 times 1.45%, that's 271.88, plus the additional 0.9%, which comes out to be 56.25. And so we're looking at the 271.88 plus the 5625, which again gives us that 328.13. So Sambit will have 328.13 deducted from his or her paycheck, right? But then the employer would only have to match the 271.88. The employer does not have to match that additional 0.9%. All right, so Self-Employment Contributions Act and independent contractors, again, independent contractors are considered self-employed individuals. And so the self-employed taxes paid if net earnings exceed $400. Net earnings equal the net income plus any distributions that they have received from the partnership income. If they own more than one business, they can offset losses and income and calculate self-employed tax based on combined net income. Self-employed tax is 15.3%. And again, that's the 12.4 they've got to pay in for Social Security, plus the 2.9% they've got to pay in for Medicare. And just like employees, they're also subject to that additional and subject to an additional 0.9% if their self-employed income exceeds 200,000. So they can have both a W-2 and self-employment income. You know, it's not unreasonable to think that someone works, you know, full-time for William Woods University, for example, but then they also kind of got a side hustle or whatever, right? So, you know, individuals can have both. It's not one or the other. And in that case, the Social Security that is paid in, you know, from their W-2 counts toward the amount that needs to be paid in total, right? So that whatever was withheld from their paycheck, you know, and is listed on their W-2 count towards what they owe in total, right? So on this one, self-employment income is reported on the Schedule C of the Form 1040, the profit or loss from business. For those of you going on to taxation, you know, next fall, we have taxation 1. Next spring, we have taxation 2. And so we're going to get a lot of practice with the Schedule C, specifically in taxation 2, because the way it's set up, taxation 1 focuses more on individual taxation. Taxation 2 focuses on business taxation. So we're going to get practice with this. A self-employed individual also must file the Schedule SE, which is the self-employment tax form. And I want to say, do they show this in the book? I thought they showed us a picture of this in the book, but I guess not. Yeah, no, it does not look like they do show us that information, but they talk about these forms on page 14 of chapter 3. But again, we'll get more practice with them in taxation. You know, and just like we're going to see with a company has to make, you know, prepayments based on their look back period. So does self-employed individuals. Generally speaking, they have to make prepayments or quarterly payments based on what the estimated tax payments will be for that year. All right, so calculating FICA with W-2 and self-employed earnings. So this one says Celia's W-2 equaled 138,768, and her self-employment income equaled 14,500. How much is the FICA on the 14,500? So you know, just looking again, she's already over the max for Social Security. So no Social Security tax on her 14,500, right? Because she already reached the max with her W-2. But the hospital insurance, AKA Medicare, she does have to pay because there is no limit on the Medicare, right? So she does have to pay that 2.9% on her self-employment income, which equals $420.50. And again, even if we add up, you know, the 138, you know, 768 plus the 14,500, what, 8, 6, 2, 3, 5, 153, 268. This individual is not over the 200,000, where she would have to pay that extra 0.9%, right? All right, here's another example. It says Prebin's W-2 equaled 68,250, and his self-employment income is 94,500. How much is his FICA tax on the 94,500? So basically, to get to that maximum, if we take that max limit for Social Security minus his W-2, he has to pay on his self-employment income, he has to pay Social Security tax on another 64,650, right? So that 64,650, again, that self-employment income, there is no employer paying 6.2% in. So this individual has to pay the whole 12.4% on that. So $8,016.60. Because again, this individual has to pay both the employees and the employer share, right? When you're self-employed, you don't have an employer paying into it for you. So you have to pay the whole 12.4%. And then same thing for the hospital insurance, AKA Medicare. They have to pay, he in this case has to pay 2.9% on the entire 94,500. So if we add together, you know, this 8,016, 27, 40, we get this total that has to be paid 10,757 and 10 cents. All right, so the SS4 and the SS5, they actually show us a picture of the SS4 or an example of the SS4 on page 15 of chapter 3. This SS4 is an application for the employer identification number. Basically, this employer identification number, EIN, if you will, is like a social security number for businesses, right? So just like you and I, you know, in our personal lives, we fill anything out, you know, application for a loan or, you know, our FAFSA or whatever, you know, we fill out these types of papers. We have to use our social security number. Employer identification number is like the social security number for businesses, right? So this has to be used on all their tax forms. If they were to take out a business loan, if they are going to open a business banking account, right? All of that would require an employer identification number. And then the file or the form SS5, this is for application for a social security card, you know, which is strange. You know, it for most of us, you know, is we're born in the United States, we're automatically assigned a social security number. But for individuals that you know, are immigrants or go through the process to become citizens, they have to fill out the application for the social security card. And just like it shows here, employers can verify up to 10 names or social security numbers per screen, or upload files of up to 250,000 names or social security numbers with verification results the next day. And then this link here gives us the link to the social security number verification service. All right, so required returns for social security purposes. So this form 941, we're going to get practice preparing the form 941, excuse me, the form 941 in this chapter together. Remember, like we said, this form 941, and I know that, you know, again, we talked about this in Principles of Accounting, but this includes the federal income tax withheld from employees' paychecks, withheld. This includes the employer's portion of FICA, Social Security, FICA, Medicare, and then it includes the employee's portion of FICA, Social Security, FICA, Medicare. And so again, we'll get some practice doing this in class together. We have, for those of you that had me for Principles of Accounting 2, we have already got some practice with this together. But again, we get more practice with it in chapter 3. Due on the last day of the month following the close of the quarter. This is a quarterly return that has to be filed. So, you know, for the fourth quarter, which is, you know, October 1 through December 31, then it's due January 31st. Or for the first quarter, which is January 1 through March 31st, then it'd be due April 30th, or, you know, so on and so forth, right? So basically, once the quarter ends, a company has a 1 month to get it prepared and get the any additional payment in that needs to be paid. So employers who owe $2,500 or less per year can file the form 944. And generally speaking, with the 944, they only have to pay in, and it talks about this bottom, I was just trying to find the page, bottom of page 317 or chapter 3, page 17. If they owe $2,500 or less per year, then they can do the form 944, which is an annual form as opposed to a quarterly form. And then the form 945, annual return of withheld federal income tax, required of employers to report income tax withheld from non-payroll payments. Pensions, IRAs, things like that. Again, it shows on page 317 a list of these different forms. You know, when we talk about the form 941, that's kind of the, you know, if you will, like the parent form. But then there's also the 941 PR, which is required of employers for workers in Puerto Rico, or the form 941 SS, which is required of employees that are paying Social Security taxes on workers in Samoa, Guam, the Northern Mariana Islands, and the Virgin Islands. The form 941V is filled in by employers with total tax liability of less than $2,500 for the quarter who are making payments with the form 941. The form 941X is used when there needs to be corrections to a previously filed 941. Then there's the form 943, which is for the annual tax return for agricultural employees. So there's a few of these different forms that are talked about, again, bottom of page 17 in chapter 3. But kind of the form 941 is like the main or parent form, if you will. All right, so depositing federal income tax and then FICA, Social Security, FICA, Medicare. Again, this is federal income tax, and then FICA includes both Social Security tax, which is that OASDI, right? And then also Medicare, which is the HI or hospital insurance. So the FICA and the federal income tax are always deposited together. Each November, the IRS notifies the employer whether they will be a monthly or semi-weekly depositor for the next calendar year. And so, basically, and again, they talk about this more on page 18 of our textbook. But basically, depending on how much is owed and how much the employer has to pay in, is how often they have to pay it, right? And so there's a little, and it's figure 3-7 in your book. If the individual, or if the company rather, reports 50,000 or less in the look back period, then they only have to deposit the money or deposit the taxes monthly. If they reported more than 50,000, and the look back period is basically like they look at like, okay, we're in 2021 now. So when we get to the end of 2021 in November of 2021, the IRS would look at the last 6 months of 2020 and then the first 6 months of 2021 to determine how often the company has to pay into the the electronic tax payment system, right? So more than 50,000 in the look back period, they have to pay twice a week or semi-weekly. If they report more than 100,000 in the look back period, they have to pay, basically they're on a 1-day rule. They have to pay by the close of the next banking day. And again, if accumulated employment taxes are less than 2,500 for the whole year, they only have to pay once a year. If the payments are less than 2,500 in the quarter, then they would just have to pay at the end of the quarter when they file the 941. So it's a function of, again, how much is owed between the federal income tax withheld and then the Social Security and Medicare taxes withheld. And so just like it shows here, monthly, if we have to pay monthly, we would pay FICA and the federal income tax by the 15th of the following month. Semi-weekly, if payday is Wednesday, Thursday, or Friday, then it's due the following Wednesday. If payday is Saturday, Sunday, Monday, or Tuesday, then it's due the following Friday. There is a 1-day rule if we owe 100,000 or more in federal payroll taxes. And then it's due by the close of the next banking day. No deposit is required if accumulated employment taxes are less than 2,500 for the whole quarter. New employers are monthly depositors unless they get over that 100,000 mark, which then triggers the 1-day rule. And then there are some different requirements for agricultural and household employees. All right, so how to deposit the federal income tax and FICA electronically, originally, just like many different things, many examples that we can think of. Originally, we had to file, like for example, our tax returns, paper-based system. We had to fill it out. We had to mail it in. Now, we are required to use this electronic federal tax payment system, right? The only exception to this is if businesses owe 2,500 or less in quarterly tax liabilities. Any more than 2,500, it has to be paid through the electronic federal tax payment system. And nowadays, especially, like I know, for example, I pay all my bills online. I log on to my bank account. It takes me, literally 2 minutes, 3 minutes to pay all my bills right there. And it's just easy. And so most employers would use this electronic federal tax payment system because it's just easier than having to cut a check and do all that, right? So the enrollment in the electronic federal tax payment system is done by completing this form 9779. It's an enrollment form. Employers that want to enroll can also do this online. And then it talks about in your book 2 electronic methods of deposit. So we can either do a direct deposit where the funds are withdrawn from the bank account and then are routed to the United States Treasury Department's account automatically, basically, or through the financial institution where the employer has to instruct the bank to send payment directly to the Treasury account. So kind of 2 different ways that can be done. All right, here's an example of the Form 941. And the next, as it shows here, 10 slides are going to walk us through this form. It's not that big of a deal. We're going to get practice with it in class together. But it's just showing us here, for example, the number of employees that we have, the total wages, tips, and other compensation for the quarter, the federal income tax withheld for the quarter. And then here's our Social Security taxes withheld for the quarter, Medicare taxes withheld for the quarter. And then if we add these together, 9287 plus the 2171, that's the total 11,459. So then we take our, our 12,372.13 plus the 11,459.07, total taxes before adjustments added together, 23,831 20 cents. Here's the second part of this form. In case there's any adjustment, usually just a fraction of cents, right? And so part 7, and I'm trying to find it here. This is actually, they go into each of this or each of these parts, basically starting on page 22 through the remainder of the chapter. So the fraction of cents, it says employees share 1/2 of amounts on lines 5A, 5D, may differ slightly from amounts actually withheld due to rounding. So that's where that reconciliation is coming in. Total taxes after adjustments, and we see that amount here. If there was any adjustment for sick pay, any adjustment for tips or group term life insurance, which there is not here. Any adjustments for qualified small business payroll tax credit, which there is not any here. So again, that leaves that total tax 23,831 and 5 cents. And then balance due. And so, had we not already made these payments, then we'd have the balance due of 23,831.05. But again, this company would have been required to already make payments. Let's go back here. So the total tax 23,831. So they would have already been required, and I'm just flipping back here and looking at on what it says. So since it's 50,000 or less, they would have been making monthly deposits. So they would have already made this payment into the electronic tax payment system, right? All right, this one, let me zoom in on this a little bit so we can see this a little bit better. So part 2, but basically line 16, it says in our book, it says, in addition, semi-weekly and next day depositors must complete Schedule B of Form 941, report of tax liability for semi-weekly scheduled depositors, instead of the Form 941 line 16. The employer's tax liability is listed by each payday. And then part 17, part 18, if applicable, if we stopped paying wages because maybe our business, went out of business, our company went out of business, or if we're a seasonal employer and so we don't have to file the 941 every quarter. Part 4, if we want to assign a third party person like a tax preparer to be able to discuss the return with the IRS. And then finally, part 5, the individual who is the responsible party. So, whether this is the owner of the company, or, again, a tax preparer, for example, we'd put in that information there. All right. So now the rest of these slides are just going to walk through each part of it. Again, just like it shows here, part 1, and we looked at part 1, the top part is the information, company name, employee identification number, all that jazz. And then each individual section here. So, part 5A, 5B, 5C, 5D, 5E, 5F. 5F is the entire tax due. And then part 6, we add lines 3, which is the federal income tax withheld, 5E, which is the Social Security tax withheld, and 5F, which is the Medicare tax withheld. That gives us the total. If there's any reconciliation from fractions of cents that needs to be done, part or line 8, I guess you would say, not part, but line 8, any adjustments for sick pay. Line 9, any adjustments for tips or group life insurance. Line 11, any qualified small business payroll tax credit. Part 2, again, box 16 or line 16, if applicable. 17, 18, again, if applicable. Part 4, if we want to allow a third party individual, such as an employer tax preparer, to discuss the Form 941. And then finally, part 5, the form must be signed by the employer or other person who is required to withhold and pay the tax. If the employer is an individual, the return should be signed by that owner. If the employer is a corporation, the return can be signed by the president, vice president, or other principal officer authorized to sign the return. If it's a partnership or other unincorporated organization, a responsible or duly authorized partner or officer having knowledge of the firm's affairs. If it's a trust or estate, the return should be signed by the fiduciary, or in other words, the person legally responsible for the trust or estate. A political body such as a state or territory, the return should be signed by the officer or employee having control of the wage payments, or an agent who pays the wages for the employer also may be authorized to sign the appropriate tax returns. And then finally, the next few slides here are just showing us where we get this information from. So as we're going to see here, some of the information comes from the payroll register, but most of it comes from the general ledger account. So, again, as we have seen, hopefully all of us have seen in Principles of Accounting 2, that, every time we do our payroll register, every time we complete our payroll register, from that payroll register, we do our journal entries to record each of these taxes. So we do our journal entries to record salary and wage expense and all the deductions withheld from the employee's paychecks. And then we do our journal entries to record employer payroll tax expense and any of the employer payroll taxes, right? So a lot of this information comes from these general ledger accounts, which show all of the entries that we've done every time we have filled out and completed the payroll registers, right? And that's kind of the comprehensive or the continuing problem that we're doing together as we go through the chapters of our books. We're filling out one of these payroll registers, and then we're going to do the journal entries to record all of this, right? But that's where we get much of this information from. So you can see here, they're just giving us the amounts, what we're doing with each line item. Again, we're going to get practice with this, so I'm not going to read through this word for word. I know this recorded lecture is already getting probably pretty long. But we can see here, again, a lot of this information comes from the ledger accounts, the entries that we've recorded from the payroll registers. All right. Hopefully feeling good about this. I think that is, oh, okay. One more. I think we're getting close to the end here, guys. I thought that was the last one, but okay. So how to report and reconcile the federal income tax and the FICA. So again, we can make our payment with the Form 941 if taxes for the quarter are less than 2,500. Anything from basically from 2,500 up to 50,000, we have to make payments monthly. Anything from 50 up to 100,000, it's semi-weekly or twice a week. Anything over 100,000, it's next business day, right? Electronic filing options are available for employers who meet requirements, but they have to fill out an application and then are able to electronically submit the Form 941. Usually they need to apply for a PIN on the IRS website, and that enables them to file electronically through a third-party transmitter, or they can use a reporting agent to file the 941 for them electronically. And then if necessary, we correct errors on the 941 by filing the Form 941X, which I mentioned before. So, okay, types of penalties. We talked about some of these earlier on in the PowerPoint when we talked about failure to comply. So some of the failure to comply penalties would be, for example, not filing employment tax returns on time, not paying full taxes when due, not making timely deposits, not furnishing pay statements to employees or contractors on a timely basis, not filing information returns with the IRS on time, not supplying appropriate identification numbers. So those types of things would incur or are subject to penalties, which are interest basically added to the taxes. Also, if it's a simple error, for example, then we might just get, interest charges on it. But if it's negligence or other types of tax evasion, that can result in some more serious fines, up to 100% fine, and then also imprisonment. So definitely companies want to, follow all of these rules to the letter, right? So that we can make sure to avoid these types of penalties. All right, and that is the last slide. Again, oop, hot dog. Stop sharing this. Hi, guys. All right. So again, we will go over these calculations more in class together and get some practice with the Form 941. And I am certainly looking forward to doing that with you guys. So I will see you later. Bye, guys.